A very good evening, and a very warm welcome to tonight's Open Door Show. And as you can see, look, it's just me. It's just me here this evening. Once more, I am flying solo. Ian's not here. Now, he's okay. He's not under the patio. He's not been furloughed. He's still about, but he's not here this week. So do apologise for that. Although, to be fair, I know most of you are going to probably put a comment in the chat box that the show is much better with just me. And really, I tend to carry Ian on this show, and we know that. You know, we all know that. You know that. I know that. But you know, so if you prefer the show with just me, put it in the chat box. If you really want to see Ian back on the next show, please put that in the chat box as well. Give me a hands up. Give me a wave if you can hear and see me, please. Give me a hands up, because it'd be a shame if I was just talking to myself. Aha! Hands are all going up. Thank you very much. So look, for those that know, for those that don't, welcome to the Open Door Show from Property CEO. My name is Ritchie Clapson. It says it on the screen, but most of you probably know that. It's great to have you here. Over the next 45 minutes, we're going to be taking a deep dive, as always, into the world of property. Above all, we've got to have a bit of fun doing it. That's what it's about, because, well, I mean, life is too short. You've got to have a bit of fun. We're not like normal webinars, okay? We want you to join in. So please put your questions in the chat box, because if there's no questions in the chat box, I don't know what I'm going to do. I'm just going to sit here, look at the screen. Well, obviously, I'm going to chat to a guest. Yes, we have a guest this evening, but I want you to be part of this. Okay, so let's see who's on. Let's see who's on board this evening. So I've got Clive's on, Jack's on, Sue's on, Yvonne's on. Hello, Sue. Ranjit's on from Property Investor News. I better read out his message because he likes a bit of promotion, does Ranjit. Very good evening, Richie. Ian, Ranjit, I don't know if you've noticed. Look at your screen, mate. Ian's not actually here. Very special guest tonight. Well, I can't say who it is because I haven't launched him, I haven't announced him yet. Without who there is no show. All the lovely Property CEO attendees. Oh, he's welcoming you all. Ranjit Singh from Property Investor News, Property Investor News, Property Investor News, That's just all he said. Property Investor News. I think he's trying to promote it. Edward says, good evening, sir. Great to see you, Richie. My first question for you was, where is all the stock? What stock? Ah, the stock on the market. Well, you've got to look for it, Thomas. That's what it's about. Dan says, good evening. Who else is on? Pardeep's on. Dorothy's on. Ramika's on. Harjinder, Harvey, Carolyn, Jamie. There's an Adam on. There's an Adair on. There's a Liam on. There's a Paul on. You're all on. That's fantastic to have you here this evening. And Harvey says, good evening. Great to see you on the show this evening. Harjinder says, where's Ian? When's he coming back? Well, maybe the next show. Hey, Richie, how are you doing? Vicky says, yeah, I'm good, Vicky. Thanks for asking. Very kind of you. Good stuff. Look. Tonight, we normally do a bit of news, but I decided that I wouldn't do a bit of news this evening because we've got a guest on, and it pains me to say he could be quite popular. It does pain me to say that, but he could be quite popular. I don't actually like the fella, to be honest, but I thought, well, if we got him on, we could boost the numbers. Obviously, don't tell him that when he comes on, but he could boost the numbers, so it could really help us here on the show. He's pretty well known in property, actually. He's a guy called Adam Lawrence. I don't know if anyone knows Adam Lawrence, co-founder of Partners in Property. Partners in Property is a great networking event across the whole of the country. It's a bit of a unique community. It really does do things in a different way, but I'll let Adam tell you that. He's a bit of a portfolio landlord. I think he's got over 400 odd properties, but you can quiz him about that. I don't know where he's got all those from, but maybe he could answer that this evening. And I do believe someone said he's got an MBA, something to do with business and managerial economics. I think you can buy those things. So I'm not sure it's a legitimate one, but anyway, he's pretty knowledgeable, I would say, in property. So would you like me to bring my guest on? Give us a hands up if you'd actually like Adam to come on this evening. Give us. Oh, that's unfortunate. Not many hands gone up. Oh dear. Well, look, I'll bring him on anyway because hopefully he's made his way here this evening. So let's just see if Adam is available. Obviously, don't tell him that tell him I gave him a big intro. Adam, can you hear me? Are you there?
I'm here, Richie.
Great stuff. Do you want to turn your camera on, Adam?
Well, not really, but I will do.
Hey, Adam. Good evening. A very, very warm welcome to you. I was just telling everyone here on Open Door how good you were and how much I enjoyed spending time with you and how knowledgeable you were.
I know you better than that, Richie, so come off it.
Adam, look, it's great to have you here, but genuinely, I've got a lot of time for you. Adam and I actually, funny enough, folks, we were at an event. It's actually Adam's event, Partners in Property in Southampton. Was their first day back in the room. And I was speaking, and it did pain me to say how good I thought Adam was at various things. And I tell you, Adam, I had to have a lie down after that. I felt slightly nauseous.
I bet you did, Ritchie. But to be honest, as much as it pains me to say it, you were on top form, and it was great to see you in 3 dimensions rather than 2.
Yeah, well,
So
that's
super
it. You know, I
stuff.
look good in 3 dimensions, and most people know that. And by the way, if you want to buy a copy of me in 3 dimensions, then just write in, and I'm sure we can get someone to make one up. I can't believe that's going to be a problem. Adam, great to have you here. We've got a whole stack of people on. I'm sure there's going to be a lot of questions, but I said you've got a few properties. You've built up a bit of a portfolio. I said you've done extraordinarily well. And am I right in saying you've got an MBA?
Yeah, I hardly ever talk about that, Ritchie. So I'm surprised you would know that, but I keep it such a guarded secret. But yes, I have indeed got an MBA from the illustrious Warwick Business School. Yes.
Well, you see, my research team are very, very good. They even told me your name. So, you know, it's all out there. We know all about you. They gave me some other stats, which I've got on the screen in front of me, but I don't particularly want to read them out. You know, they gave me a number of other facts. But yeah, MBA, that's fantastic. Adam, do you want to tell people who you are, what you do to start with? And then tonight is all about what's the state of the property market. And I think what our listeners would love to hear is what your opinion of it is. So before we open up the floor to questions, and by the way, please put questions in the chat box. Otherwise, Adam and I just rabbit on for the next 45 minutes. So please pop your questions in the chat box as Adam talking. Adam, introduce yourself, tell us what you're about, and then perhaps follow on and tell us what you think the market is doing.
Thanks, Ritchie. So my name's Adam Lawrence, as you've said. The boring bit, probably, the boring phrase is portfolio landlord, I suppose. But I've bought something approaching 500 properties over the past decade, and I've held on to the majority of them, about 90% of them, having trimmed a few and sold a few and all that along the way. So that's been quite exciting. I've also built and bought into letting and estate agencies as part of an integration along the pipeline of property trading businesses and things like that. I've dealt a lot with cash buying companies and have done a little bit of work in that space as well. I'm involved in an auction company as well. So you can see I've been quite keen to get into the industry whichever way I can with anyone who would have me or give me any time of day, really, Ritchie. And as part of that journey as well, I set up Partners in Property back in 2017 now alongside Sue Sims. So as you said, we really wanted to do something different. We kind of took the rule book of networking meetings that probably were masquerading as networking meetings that really were just funnels trying to catch people who were brand new to property and extract a lot of money from them for courses that didn't really teach them anything or taught them the wrong things, even worse, really. And of course, that is still absolutely rife today. And you will know that, Ritchie, because you have to swim in that sea of sharks, and it's not an easy sea to swim in. I don't envy you for that, but you do a great job of it. But that's because you've got some proper content, which is, of course, what they can't compete with. And that's really what we've tried to do at Partners in Property as well. And actually do what we say on the tin, really, and try and meet people who are property professionals, who are enthusiastic about property. They might be developers, they might be traders, they might be investors, they might be one of the above trying to be another of the above or trying to migrate across. They might have sold a business and got some serious money to invest into property. We welcome all sorts of people, and we do welcome people who are new to property and try to stop them from falling into some of those traps they can otherwise do. You know, we've got a few hundred hours of recorded content, some of which unfortunately is Ritchie, but you can't have it all, you know. But we've got a good few hundred hours of professionally recorded content on our digital repository. We've got, you know, private Facebook group. We've got WhatsApp groups where people who, generally speaking, don't really contribute to some of the internet discussion that can be of varying quality, let's say, but will actually give their thoughts in our walled garden, if you like. And we also do, we're pretty stupid, really. We have a few sponsors. We've turned down a lot of other sponsors because we don't like the way they do business. We only work with people we do like, and also Ritchie, of course. But no, we're really quite choosy about how we associate ourselves with, and we want to work with people like Ritchie who are also choosy who they work with. So it's a mutual thing, and in honesty, we are honoured to have Ritchie consider us as worthwhile partners and to spend his time coming to our meets. So we're grateful for that, and gave a great presentation the other day, and that's the last nice thing I'm ever going to say about him. So anyway,
I'm blushing a bit now. I tell you what, I don't know if this is coming out on the camera, folks, but I mean that honestly, Adam, that's a really lovely thing to say,
No,
and
I
I'm
do.
like
I
I'm
do mean
welling
it.
up a bit.
I thought you were. I thought you were. So let me go back to my favourite subject of me then. No,
Good.
we started in Birmingham, Partners in Property 2017, and we now have 5 physical meets around the country. We're back to face. So that was fab. We were one of the first people to go online when the writing was probably on the wall about first lockdown and all the rest of it, and one of the first people to go back to doing face to face as safely as we can, bearing in mind what's going on still in the hopefully death throes of the pandemic, realistically. So we also run the occasional event, a one-off. So we very recently ran a social housing summit. Sue, my co-founder, is extremely passionate about it. It's something that I've done to a reasonable degree, but she has really taken on the mantle, and we like to call her the social housing queen, or whatever we can get away with, really. And she's fab, super passionate, helps people all the time. I don't know anyone who works as hard as Sue. She's absolutely fabulous to work with, and she is what you see. And I think that's one of the whole points, really, of Partners in Property. So the only other thing I maybe might just mention, Ritchie, is I spend far too much time every week writing my thoughts down in a piece of work that's far too long for everybody to read, but it helps me to organise my brain a little bit as well, and publish that on a Sunday morning on the Partners in Property Facebook page. So we call it the Sunday Supplement. You might see it as a complete and utter snooze fest. You might see it as the greatest piece of analysis in property on Facebook, which maybe isn't a particularly massive accolade anyway, but I try my best, and I appreciate comments.
I'd hate to be inside your brain. I really would. I can't think of anything worse. I'd rather poke sharp sticks into each eye.
I've got quite a big head, metaphorically and realistically, so there's plenty of room in there. So there's plenty of space up for rent, Ritchie. In fact, I'm pretty sure you've rented a bit of it before when I've been considering whether you'd have more people on your mastermind table than I would. But anyway, we digress. But
we absolutely do. So tell us, Adam, about what you think is going on in the market. So can you condense your Sunday supplement over the last week into a quick 5 or 6 minute or so? What you think? What does Adam Lawrence think is happening in the property market? And I tell you what, all listen to this. Maybe take some notes.
Yeah, I'll absolutely try my best, Richie, and I do spend a lot of time thinking about it because I'm always thinking about the long term, as well as the bits and bobs that are making money in the now as well, of course. And a lot of people are, I think you have to consider property to be a long-term investment. Even if you're developing, you're still going to be in that for a couple of years, realistically, if not more sometimes. So that's still reasonably long-term, and it isn't necessarily going to pay the bills tomorrow, but it can yield some decent chunks of money. So it's important to know. And obviously, I mean, developers specifically want to be trying to develop into a rising market, a robust market, where if they're looking to sell the units at the end, they're going to get best price. Even if they're looking to hold the units at the end, they're going to get best valuation, and the market can carry them that little bit for those things that can crop up and go wrong, and all the rest of it, really. And I think the key factors at the moment, you've already kind of mentioned one of them in your lead in, Ritchie. Stock availability levels, they've been awful. They were obviously very poor in certain parts of last year, but even when we look back to comparisons with a couple of years ago, the stock is not great that's traveling through auction. Auction is a pretty good bellwether because it's faster than the open market. And if you look at the open market stats, one of the things I like to do, and I think it's very good for people to look at in their own investment areas, is just have a look on Rightmove. How many houses are there up there on the market? How many houses are there that are sold subject to contract? Then you can see the percentage that are sale agreed, the percentage that are not sale agreed, but also the absolute raw number of houses that are in your local market. And you'll be surprised about, even on a normal year, which obviously we haven't had one of those for a couple of years, or maybe for about 6 or 7 years, to be honest. But even in a normal year, there's massive seasonal fluctuations. But when things don't sort of pan out as you expect, it distorts things. And COVID has distorted supply of properties in a big way. It's also distorted demand the other way. So these things, when they come together, just force the prices up. There's just an economic inevitability about that. And also a lot of the X Factor then. A lot of the the stimulus money that's been dished out one way or another, whether it be bounce back loans, whether it be furlough, whether it be a lot of this stuff has been saved by people. That much is very clear. You know, tens of billions has been wiped off household debt, which was something that I certainly didn't see coming during the pandemic. But now people are looking and thinking, well, where do I get money from? You know, stocks look a little bit expensive potentially. Bonds are returning nothing. The bank returns nothing. Can't leave it under the bed. And my favorite buzzword at the moment, inflation, is eating away at that capital. You know, so it can't sit there not making money forever. So property is often, arguably at the moment, more attractive than it's been for years in an investment, with an investment or development hat on. And I think it's quite likely that we have not a bull run in the same way that we have had over the last 12 to 18 months. I think all those structural factors will dissipate. If people have followed things like the price of wood, you know, it absolutely shot through the roof up to about May this year, and it's actually been coming back down again, back to somewhere near normality. And it'll probably drop again because there'll be too much, because you know, there's a lag between when people are producing it and when people are consuming it, and that's commodities in a nutshell. And COVID's done that all over the place. But I don't see the property market coming crashing back down. I'm not saying there won't be maybe a little correction, and sometimes that little change in sentiment can be helpful. So perhaps at the end of this month there might be a little 2, 3, 4 weeks that are quiet because of the final tapering off of the stamp duty holiday. You know, a few bad headlines and maybe a flu outbreak, and God knows what could happen really. But I don't see that being a sustained drawdown, because I don't believe that a bubble has been created by what's happened in the last 18 months. Rental stock is very low, and landlords have been being disincentivized for 6 years. That's not changing. If anything, the EPC things that are going on in the wider marketplace are going to cause more problems than they solve, and push more and more people out of the market. I just have no idea how they're going to really try and implement that, or perhaps with Boris's attitude is to throw a lot of money at infrastructure, and perhaps he'll throw a lot of money at insulating homes as well. People are busy gluing themselves to the motorway to try and encourage him to do so in a roundabout way, although obviously probably not to benefit landlords, because that's not their political position, I would imagine.
Who knows? Maybe that's a bunch of landlords up there on the motorway.
Maybe you can get one of them on the show, Ritchie. That'd be great.
I thought I had, but clearly not.
In a day, I know I've not glued myself to any roads recently, but I think, you know, inflationary environments, wealth and money needs protecting, generally speaking. Property historically is a great way to do that. Inflation is friendly to you if you're holding a lot of bank debt, and of course debt is so cheap at the moment because of the low base rate, which looks set to persist for a reasonably long period of time, perhaps even up to 15 years looking historically. Only a lunatic would predict 15 years in the future, so take that with the pinch of salt that you should do, but I wouldn't be surprised to see it really quite low for the next 5 years, because we haven't really got too far for it to go. But, you know, wages are on the rise. That's a good thing for house prices as well. There's lots of reasons to be reasonably bullish, and I can steal a stat from your presentation the other day, Ritchie. They're now saying we need 300,000 homes a year, and even if we manage to deliver 250, which is our best performance in the past decade, I think, you'll correct me if I'm wrong, we're still losing at 50 or 60,000 a year at least. And obviously last year we suffered a bit from the pandemic as well. So that supply side constraint that we have in the UK is not, even with the liberation of planning laws that they seem to be clawing a little bit back on as time goes on. But even with the mass liberation, it's not going to be enough to tip that balance and us deliver more homes than we need, I don't think. So that's probably 5 or 6 minutes of waffle.
It was 5 or 6 minutes of waffle, but it was very good. It was intelligent waffle. But just in a nutshell, then, we have a lot of developers on the show. We have a lot of property people, but a lot of developers or potential wannabe developers who are thinking about putting their toe in the water. And often the concern is, okay, I'm going to develop something, but I'm not going to put that into the market for a resale or for a build to rent, whatever, for 18 to 24 months. And I'm really nervous about the market in 18 to 24 months. What would you say to give people some confidence, just very quickly, because I see questions are coming in. I want to jump onto some questions. So what would you say to give people confidence that actually, yeah, 18 to 24 months, you're probably going to be okay? How would you sum that up very quickly?
Well, last 12 months, 13% rise in prices generally across the country, obviously varies from area to area, 8% rise in rents, 4.3% rise in real wages over the last 2 years, which is significant because it obviously tries to ignore the effects of the pandemic. Historically, after pandemics, wages actually increase and returns on capital decrease. And as I said earlier, they're the primary driver of house prices still not going to be delivering enough. And the shock to the supply pipeline of 2020 will still be being felt in 2022 and in 2023. So if you can turn it around in that period of time, have we got any major disasters around the corner? I don't think so, because we've got a government who would once again go to the breach, print more money and kick the can down the road again. So an extreme drop in attempt, if you do your stress tests, as I'm sure you talk about, Ritchie, at 10% drop in prices, that looks like a really unlikely scenario to me in 2 years' time at the moment. And I would be quite happy developing into what I really do expect to be a rising market, not one that's going to, absolutely take off, but I wouldn't be surprised if we put on another 10% in the next 2 years in total on top of the 13 we've already put on. That wouldn't surprise me one little bit.
Great stuff. Okay, you ready for a few questions?
Absolutely.
I don't know what's coming, but let's have a look. So the first question is from Will. Good evening, Will. Will says, evening, Adam, which I think is always polite when someone opens it up like that. Evening, Adam. How have you managed to buy so many houses in such a short period? It seems to take me ages to save each time for a deposit. How can you answer that one? And we're going to get through as many as we can, so fairly quick fire.
So I suppose, Will, from the start, I've kind of tried to use BRRR, how many ever R's you want to put on it, without knowing that's what it was called back in 2011 when I started getting on with it, on steroids to an extent. So the steroids really would describe joint venture partners, third-party funding. I've used a mixture of debt and equity funding, and I've also been willing to, but I haven't been living out of my portfolio. So I've been willing to burn the cash that it has started to throw off into buying more and buying more and buying more. So that's quite powerful because, when I said about 500 odd deals, 450 of those deals are probably in the last 5 years. The 5 years before that, it would only have been 50 deals, and only 50. It's not, it's still good in 5 years, but it just shows you where it almost always looks like a curve that goes like this, and the pandemic has slowed down. If it wasn't for the pandemic, I'm sure it would have been more. It's actually kind of made me have to slightly switch my buying strategy, and the time, obviously, we had 3 months off buying because the market was pretty much closed for 3 months. So there's not a lot we could do in that time. So it obviously threw up other opportunities and did mean we maybe did more. I mean, I did more deals last year than I've done before, and I won't make that number in 2021 because of the COVID hangover, if you like. But yeah, it does simply work as simple as sort of 1, 2, 4, 8, 16, 32. You can start thinking like that if you can solve where your bottlenecks are.
Did you 5 years ago, because you said you did about 50 in 5 years and then you went bang, off it all went. What was the change point 5 years ago that then made you accelerate quickly? Because you clearly didn't accelerate as fast as you are now in the first 5 years. What was that aha moment?
I think probably the biggest part of that was, I think there were two things really. One was mindset. I think I was coasting a little bit and I could have done more in the first 5 years. And the other one was leverage and stepping into the breach using bridging finance, that allowed me to stretch my equity because I managed to negotiate some really good deals where bridges would fund sort of 90% plus of a purchase price. And if you're buying under value and you can borrow 90+% of the money, and your deals are good, you can imagine how much, if you, instead of putting 25% deposit in, you put 10, you can buy 2.5 properties for every one that you were buying, obviously. So that
your maths is really quick, isn't it?
I try.
Okay, well, hopefully that's answered your question. Here's one from Karen, actually. This is interesting. Do you stick to just simple buy-to-lets, or have you considered HMOs?
Great question. So I did a fair bit of HMO early on. I was seduced, like many are, of those. Look at this. This is the same building, but it's higher yield, and that must be fantastic. I didn't like. I'm a bit of an early adopter, but I'm also an early bailer, I suppose, really. So I started bailing out the professional HMO market in early 2016 because I didn't like the direction of travel with the valuation office banding of rooms and also the reality of the operational costs and time and effort versus a single let was meaning I think we had a couple of HMOs where maybe there was 5-room HMOs and we probably had less hassle managing 25 single lets than 5 HMOs. So that all had to be taken into account. And I sold off some of them. I repurposed some of them for social housing. And I do have absolutely social housing HMOs, but bear in mind they're generally on a lease with an operator. So it's a nice hybrid way of getting a commercial style approach into a residential property.
Okay, Karen, there you go. So up to you, Karen, if you want to get involved in HMOs. Who knows? Maybe it's a good thing, maybe it's not. Tibbs says, do you see any similarity in today's market to any time in the past? And what is your approach to today's market? Well, I think you've talked about a bit of today's market because this question came in as you were chatting. But any similarities in today's market than what we've had in the past?
What a great question. My gut feel there, really, Ritchie, is no, I don't see a similarity with anything over the last 10 years. It was very flat when I started buying, which made it quite easy for me to have power as a buyer, because I had a bit of buying power behind me and JV partners with money and all the rest of it. And then it got a little bit more difficult on the open, or a lot more difficult on the open market, but it was still fairly soft in the auction market. There were still deals for those who could analyze things. At the moment, I'd say it's really I'd say the auction difficulty compared to the last 10 years is about 9.5 out of 10 at the moment, maybe 9 out of 10, just because of the volume of stock. Agency wise, they're just not getting the stuff in the windows like they were. So same number of people, potentially better capitalized, chasing fewer deals is always going to be difficult. And I speak to and do business with a fair few below market value traders, cash buying companies, people like that, and some of them have not quite shut their doors, but they've cut their advertising budgets massively. They've cut staff. They are paying double the amount for leads that they were 18 months ago. So I think everyone, and I think that this market difficulty would be a 8.5, 9 out of 10, and some of the 10 out of 10 has passed us by probably April, May this year. So definitely one of the more challenging markets for a buyer. Yeah.
Interesting. I've got another thing on the market here. This is Jay. Jay says, do you monitor the property cycle based on the 18-year cycle? And if so, where do you believe we are currently within the cycle? Now, I know you've probably talked about some of that, but do you want to sum up a bit of a comment on that?
Yeah, I'm not a big fan. I'm not a big fan of the cycles because I think you could use that as an excuse to do things when maybe you shouldn't, or you could be not looking hard enough. I mean, we talk about the business cycle quite a lot, for example, and we had a very extended period of easy money, especially in the financial world, between 2010 and 2020. Now, it's quite rare for a business cycle to go on for 10 years without a recession. And you could argue we only had the recession we had, and you could argue, well, what recession? Because there was so much stimulus money around. A lot of people didn't really feel the pain of the recession. They might have felt the pain of being locked indoors, but they didn't feel the pain of the recession. So, you couldn't have assessed that from a cyclical perspective. It wasn't time for a pandemic or anything like that. But I think you always start to see signs. And if you look back and you see those signs, I mean, there wasn't 18 years between 2007 and 1991. There were 16 years. And there have been 20+ year bull markets that you wouldn't necessarily want to miss out on. We've had a really strange corrective wobble with a lot of money being pumped into the system, and the nearest proxy or the nearest example to what's just happened is 100 years ago with the Spanish flu, and it's not the same as what happened after the Spanish flu, after which we had the Roaring Twenties, of course. But you can't compare this too much to what happened between 1945 and 1970, where again you could argue there wasn't a recession or a necessary dip. I mean, property prices didn't really start to take off until the 50s, but between 45 and 74, I suppose, where was the 18-year cycle then? I think you've got to react to what's going on around you and accept that whenever there is a big change or a big event, a black swan, if you like, you need to react accordingly to that at that time, not sit and think, well, I've got 7.3 years left here because of the 18-year property cycle. I don't think that's the right way to go about it. It doesn't mean that patterns don't repeat themselves and bubbles don't start to exist. I put a post up at the start of this year about the bubble in crypto, and I think crypto then put on another 40-odd% before it then took a massive bath, and then it started to come back again. So notoriously difficult to predict, and I'd rather try and keep a sensible eye on the pulse of the macro indicators. And if you talk to people who are involved in 2007, for example, they will tell you, a lot of them, that they knew there were signs that things weren't right and things were about to potentially go wrong. But there was probably 9 months at least of everything carrying on, while really underneath the whole thing was built on sand. And then suddenly it took Lehman to absolutely drop the hammer.
Jay, I hope that's answered that question, and that's interesting. I mean, I'm definitely not as clever as you, Adam. I don't have any what are they called, MBA things. I don't have any of those things. I do have a degree, but I don't have an MBA, and I am professionally qualified, but I don't have any of that sophisticated economics type stuff. But I always very much subscribe, and you said it. I look at what's going on now and I react. I'm a great believer in having an agile business, have a business that is flexible, have a highly leveraged business in terms of overheads. Make sure that you can cut things quite quickly. You don't have a big monster, a big super tanker that you can't shift. And I'm a great believer, although I have to do it to a certain extent, but because I train people, I have to know what's going on in the news. But actually, I wouldn't watch the news. And I've got a great friend of mine. He's now, Christopher's in his late 70s, I think, still non-exec coaching and training people in business. And Christopher will tell you he's not watched the news for about 40, 50 years. And he always used to say, I just never know when there's a recession. I don't know. And he just reacts with the businesses that he coaches and advises. And he said, well, there's no recession in my business. And I think sometimes, I mean, maybe you can take it to extreme, but actually I do think there's a point of here and now. What's going on here and now? What can I do, as you say, rather than sit and wait for cycles? Interesting. Here's a quick question from Jin. What's Adam's opinion on SA, service departments? There we go. You don't do HMOs, but what about service departments?
Yeah, I think the geek in me loves to make the distinction between the investment business and the operational business, or the propco-opco split, as they like to call it, in the periodicals. And ultimately, SA is a hospitality business that happens to run within a property that you may or may not own. You might rent to rent it, and it's like any other trading business. There's lots of demands on your time, probably out of hours, difficult to switch off from. But you can, I've got for example, got a block of flats at the moment that we've agreed a sale on to a care provider, and they'd like vacant possession. And while a few units have sort of organically become empty, I've been working with someone, they've been running some SA in there, and the profits have been fantastic in some of the months. It's been unbelievable. It's been far better than having a void, obviously, but even far better than having AST tenants in there. So if you're working with the right people, or you are the right person and you can put the legwork into it, the one thing I'd say about SA is it always makes me smile a bit when people who aren't people try to get into SA, because it's a hospitality business at the end of the day. If you're going to get hacked off because someone's going to ring you at 9:30 at night, you're not in the right business. So consider that. But I think it can be a good trading business. And some of the, there's some massive rent-to-rent operators in the UK who are not necessarily doing SA, but rent-to-rent in and of itself, there's nothing wrong with it if it's done properly. The problem is the vast majority of the conventional wisdom that's out there, and some of the people who shall remain nameless who've started training on it, even though I don't think they've done any SA in their lives, are Samuel Leeds, sorry, I did say it out loud, have got no right to be doing that, and they've got no clue about how to operate a proper trading business. The only trading business they operate well is taking money off people who seem to give it to them in the significant droves for poor quality information. But probably said too much there, Ritchie. Hopefully we won't be sued. Sorry about that.
No, I'm sure we won't be sued, but I think it's always good to be. There's a comment Helen's just put in there. Thanks for the frank and insights given by Adam. Yeah, I mean, look, Adam and I, when we first met, I think we got on quite well. We just say how it is. I try not to. I don't want to slag off competition, but you just, sometimes you put your opinion out there and you say what you think, and I think people respect you for that. And sometimes I'm at events and people say, oh, this, and I go, no, I don't agree with any of that. They go, what? No, I don't agree with any of that. Why? Well, there's my opinion. Okay, here's a question for you. This is Sadie. Adam, What do you think about property development? Do you see that as a good route for people thinking of getting into property? Now, of course, we tell them every show that it's a great thing. But Adam, quite honestly, what do you think about property development? You can say what you want.
I think it's hard, Richie. I think it's hard. And I think if it was easy, everyone would do it. We all know that, don't we? I think you need good organizational skills. I think it's a massive bonus if you like creating something really good from something that usually starts as pretty crap. If you're going to get a buzz from providing accommodation for people and your finished products and all the rest of it, it's a great place to be in. I think it can be something that people try to do. You know, I suppose I've never really thought of myself as a developer, although I have refurbished hundreds of units and I have converted a few blocks and done a few bits of bobs. So it's impossible for me not to be a developer, really. But I suppose I start with historically, I always considered the investment mindset to be hold on to it and the development mindset to be sell it all off. But it doesn't have to be that way. You know, there's massive hybrids in there too. So I think you need to bear in mind that sometimes it can be baked beans on toast and then suddenly you can afford a Ferrari. But if you're going to spend it on a Ferrari, you're probably not going to make it in the long run as a developer. But it can be big lumps of money, and that in itself takes management, bankroll management, if you like. And I think it can be incredibly frustrating. If you get hacked off at officialdom and planning, it's a tough choice to make. But I think it's like anything really. You need to work with the right people. If you're working with the wrong people, it doesn't matter what you're doing. It's going to be frustrating. You're going to lose money. It's going to be a problem. If your mindset is I'm going to get rich quick, then it doesn't matter whether you're investing in Forex or it doesn't matter what it is. You're going to lose your money one way or another because someone's going to find a way to take it off you. So it really depends a lot on you and your personality. I don't think everybody can do it, but I think that in many ways, anybody with the right mindset and determination can do it. They might have to push themselves a long way outside of their comfort zones, and they might have to, and they've also got to be realistic about all the costs there are in doing something, not just, oh, I bought this for 100 and I built it for 150 and I sold it for 400, so I made 150 grand. Well, we all know you didn't, because there's some stuff that went on in the middle there that needs putting in. Now, it doesn't mean you did badly, but you know, you've got to be realistic, haven't you, Ritchie? I think it's fair to say.
Yeah, no, I think so. I mean, I think it's like anything. You shouldn't just give it a go. I mean, development has the opportunity to make people, as you say, large lumps of cash, which can change people's fortunes overnight once they get that cash in their pocket. But equally, I always say, yeah, would you like to make $250,000? And most people go, yeah. I go, well, you can do that as a developer, but would you like to lose $250,000? And they go, well, no way, because that's what you'll do if you're not careful. And it's as easy to lose $250,000 as it is to make it. So yeah, I think you're right. You know, a certain amount of skills is, you know, certain organizational skills, management skills. It's definitely not for everyone, but it's possible if you want to do it. But it is hard work. There we go, Sadie. I've got another question here, which sort of comes on the same theme. I'm going to answer it to start with, and then I'm going to get you to add to it. But it's from Mike. Mike said, what advice would you give someone who is looking to take the first step into the world of property? And my advice to Mike, and generally, Mike, is get yourself involved in a network like Partners in Property, okay? Because the great thing about Partners in Property, without bigging it up too much, I'm going to be a bit careful, is that they don't sell you anything. You know, now people that know us will know as an organization, we don't do a run to the back of the room. If you want to work with us, you can work with us and we'll talk to you and that, but you just can't just go online and pay for a full mentorship. And one of the reasons that we work well with Pip and Adam's team and Sue's team is that we don't sell anything at Pip. We just give advice and we give content. And that's the whole ethos of Pip. So you can go to Pip comfortably, Mike, and no one's going to sell you anything. So that's a great place to go and dip your toe in the water. There's a cost, obviously, to attend. I don't know what that is, but I'm sure it's perfectly reasonable. But you can go there and get great advice. But what advice would you give, Mike, Adam, in terms of what's the best place to start?
I think you could spend a lot of time on Ritchie's YouTube channel and watch some back catalogue videos, because obviously
you want to do
free.
that though, that'll send him to sleep. Give him some YouTube advice.
But it's great stuff. It's free. It also gives you an idea of the true depth of the subject. You know, people say to me, you know, what strategy do you follow? You know, do you follow this or that or the other? And my strategy is I try to buy at a reasonable discount, something that yields reasonably well and is going to last a long time. That doesn't sell courses and it doesn't trip off the tongue, but that's what I try to do. So I look at deals, and I know Ritchie looks at the world in the same way. He looks at a deal on its merits, and that's a skill that you need to pick up. So I think free time wise, podcasts and YouTube, fantastic. And just make sure you're not getting seduced by people who are promising you riches tomorrow. Realistically, you can make £1 million quite easily in property if you start with 2 million, which is similar to Ritchie's. You know, you can make $250,000, but you can also lose it. So I think stick to a lot of the free content, and you know, be skeptical, but not everyone out there is bad. Be suspicious of the people who you see 17 adverts from them every day on Facebook or YouTube or whatever, because their marketing spend is huge, and that probably means their educational content is quite poor. There is a correlation there, a negative one, unfortunately. But yeah, drink in as much free content as you can and try and hook up with some good people. There are some really generous people on some of the Facebook groups who give a lot of their time, effort, and energy. Find out who you align with and get yourself into the mindset that it's not get rich quick stuff. You know, the more you learn, the more you earn. I dislike the person who uses that phrase, but I do think there's an element of truth in it, but you've got to be learning from the right places.
Good. There you go, Mike. I think Izzy asked a question, but I think we've answered that. She said, good to listen to you, your ideas and opinions. So I thought I'd read that out. At least someone here thought you were good. I'm looking to get into development. How do you think I should try and predict what happens to house prices next year? Well, Izzy, I think we've answered that earlier. If you didn't listen to that, if you joined us a bit late, I know a few people did. Have a listen to the replay when it goes up on YouTube next week. Let me do a couple of quick ones here before we wrap up. Tom says, how would I find which vendors are really motivated to sell quickly? There's a thought for you, perhaps in the sort of buy-to-let market. How would you find a highly motivated seller?
Well, I mean, one way to shortcut that is obviously try and buy through auction, because by definition, everybody in auction is a motivated seller. They want to get rid of the property, otherwise it wouldn't be in the auction. You do sometimes have to look out for the stuff that's priced very, very low, that's, you know, looking to attract 500 people to look around it and 150 bidders and all the rest of it. So be cautious on that front, but that shortcuts that process. I think you can find motivated sellers on the open market, but it also depends how hot that market is, because as soon as it's hit Rightmove, it's in the public domain, everybody knows what's going on. Sometimes you see motivation, and one of the things that is, if you're still working on open market stuff, one of the things that might be worth having a look at is stock that's been hanging around for a long time, especially in a market like this. Because the funny thing about motivated sellers is, you know, almost every motivated seller starts their journey as an unmotivated seller, and there's something that happens along the way, whether it's time, whether it's an event, whether it's something outside of their control, and suddenly motivation switches on. So it might be, you know, the estate agents are notorious. If it's been in the window more than 4 weeks, they're not really bothered, because they know they've missed their best chance to sell it, and they're going to try and sell the stuff that's just come in because nobody's seen it. So it's sometimes putting the legwork into stuff like that, and sometimes it can be something that's on the market that says cash buyers only, whereas a little bit of nous and a little bit of expertise will actually be able to find you either a bridging loan or even a mortgage. I've bought many cash buyers only, and very, very rarely have I used my own cash to do it. Very rarely.
Where's your cash? Is it under the bed?
It's all in property, Ritchie.
So it's all in property. Okay.
It's in the ones that didn't refinance very well, mate.
Say again.
It's in the ones that didn't refinance very well, I said.
I thought it was all under your bed. If it was, I was going to read out your address, and they'll all be round this evening. They're a rough bunch on here, Property CEO. Final question from Helen, and then we'll wrap up tonight's show. Helen says, what kind of businesses are likely to come back to the towns for the empty commercial units for investors who have mixed units? And she says, please. So who do you think is going to come back to the high street first? That's an interesting one. Let's just finish on that.
Brilliant. I think it's interesting because I think some people have already started to come back to the high streets, and it's been, some businesses I've seen have been quite surprising. Local to me, one of the units on the high street has been converted into a notary's office specifically for clients coming over from Hong Kong. So I didn't see that one coming, but obviously there is a fair amount of motivation and money coming over from Hong Kong into the UK market at the moment. So there are some curveball businesses I've seen over the last 3 months, because I'm a geek. I go around observing these things, and pop-up shops that are charity-led or trust-led, or art shops, things like performance shops. Experience is a big one for the big disused Debenhams and the likes. You know, some of them have had big money pumped into them for go-karting tracks and laser quest and all the things that come along with that. So big capex, but a big a leisure conversion into leisure units effectively, and the right sorts of leisure units. What do you see? Escape rooms, ale houses, restaurants. There's many more restaurants around in my local high street, maybe just because they're patronised by me, Ritchie, I don't know, but many more. There's double the number of restaurants there were 10 years ago, without a shadow of a doubt. So presumably they're doing quite well. And then I think anything that is an experience-driven or non-internet, you know, I mean, barbershops and hair and beauty and stuff like that, very low barrier to entry. Almost anyone can have a go at them. Not everybody needs them, of course, but yeah, that sort of thing. There's a vast variety. I mean, vape shops are doing well, but they've been doing well for a while. There's lots of slightly raggedy-taggedy covenants, but things have changed in the commercial space, and the lenders are starting to catch up. But they are, as they always are, a little bit slow and a little bit conservative in these situations.
Helen, I would just add to that yeah, I think a lot of bespoke individual companies, you've got to make those units small to be attractive. The people that I know who've got commercial space are dividing that up, which, okay, you don't necessarily need planning permission for that. You might for the shop front, divide it up into smaller units. And I wouldn't say they're going like hotcakes, but they are going relatively quickly. And so I'm talking about individual bespoke retailers. I've talked a lot in the past, over the last few years, about the great British artisan business boom, which is not my term, but it's about these small individual trading businesses, you know, the design-led businesses, people running their own little things, which can afford a small shop unit on a flexible lease rent arrangement. Co-retail is a term I use as well a lot. I've been talking about that over the last 18, 24 months. So having flexibility in what you've got, if I'm assuming, Helen, you've got some units here, I think is absolutely key. Great stuff. Adam, look, we've run out of time. We've run over time. I think that's because you were waffling on at the start, to be fair, but hopefully you've enjoyed it. Ranjit's put something else in about Property Investor News. I don't know what he's going on about there, but he says if you buy it, you can read Adam and Ritchie's articles. We're both in Property Investor News, so it must be a good magazine. So there we go. Fantastic show tonight, he says as well. Great stuff. Well, look at that. It's fantastic. Hands up if you enjoyed Adam this evening, and if you'd like Adam to come back at another time. Give us a hands up. Give us a wave. Oh, that's great. I mean, one person has. That's really good. I think. Did
you say Adam Lawrence next to that hand? Does it, Ritchie? Is that it?
Oh, it is you. You've put your own hand up. That's unbelievable. No, quite a few hands have gone up. I mean, admittedly, I have to be honest with you, not every single hand. So, but quite a few. Quite a few. Adam, look, it's great. Thank you very much. It's great to have you on here. Thoroughly enjoyed it. Will you come back again at another point?
I'd be delighted to, Ritchie. Thanks for having me. Had a lot of fun, as I always do when I'm talking with you. Cheers, mate.
And Adam, if people want to get hold of you and get hold of Pip, what's the best way? What's the best contact details?
So Partners in Property has a public Facebook page where I publish a supplement apart from anything else. That's a great way to get in touch with us. Send us a message, or partners-property.com. I'm on Facebook under Adam Lawrence and posted UK Property Traders as well, or Adam G. Lawrence on LinkedIn. I don't think there's too many Adam G. Lawrences around, so LinkedIn's a great way to get in touch as well, Ritchie.
Could you get one of your team to drop that down to my team and get the contact details? And what we'll do, everyone, we'll put that in the show notes up on YouTube next week. So dive on there. If you want to contact Adam, you can do that. Adam, thank you very much. You go and enjoy the rest of your evening. It's been a pleasure to have you on, my friend.
Thanks, Ritchie. Cheers.
Well, that was great, wasn't it? I mean, he, you know, despite what you might have thought, he was pretty good. Very good. I thought he was very good. I always value Adam's opinions, genuinely do. I think he gave you a lot of good insights this evening, so hopefully you have thoroughly enjoyed that. We will get him back again. And actually, I did speak to Adam's business partner, Sue, just this week, and I'm going to get Sue on at some point because I think Sue will be terrific value. As Adam said, she will speak her mind as well. Please drop in the chat box if you've enjoyed tonight's show. It's always a pleasure to see the comments. Obviously, if you haven't enjoyed it, pop that in there as well. So please pop in the chat box if you enjoyed it. It's always good to see that at the end of the show. Now, unfortunately, no show next week. A lot of our students will know we actually have a a very full-on 4-day event, a training event with our students next week. And on the Thursday evening, I'm afraid we're actually taking all of our students who are attending that event out for dinner. So the bill's going to be fairly pricey. So apologies, no show next week because we're going to spend some time with our students. But the week after, Thursday the 30th of September, we have a great friend of mine called Tim Bishop on, and he's from a solicitor's. You've got to be careful how you say this, but it's called Bonalac and Bishop. Bonalac, that's what I said. Bonalac and Bishop. Tim owns Bonalac and Bishop. He's 100% owner of that business. Very talented guy. Got a bit of a musical background as well. Maybe we'll quiz him on that, so my team tell me. But anyway, Tim's going to be with us on Thursday the 30th. He's going to answer all your questions all about property law, so please come and join us then. Until then, thank you very much, and let's just see what's in the chat box. So let's have a look what people have said. Great guest. Thanks, Adam, says Dan. Okay, Adam, that's okay. What about me? So any thanks to me. Tim says, yeah, yes, awesome, great. Thank you for a good show tonight. Thoroughly enjoyed it. Wonderful session. Always enjoyed it, says Helen. Great to see you, Ritchie, says Helen. Well, great to see you as well. Ramika says, thank you very much. Thanks for a great show, says Dan. Teresa says, good show, Ritchie. Thanks, Ritchie, says Derek. Helen says, thanks for the 3-day course, which helped us get us started on our journey. Excellent. Commercial to residential, no problem at all. Josh says, thoroughly enjoyed the show tonight. Great guest. Good stuff, says Clive. Iddy says, thank you. Thank you to you, Iddy. Thank you, everyone. Good night. Have a good week. See you soon. Bye-bye.